Holy smokes everyone, what a crazy week it has been in the markets. We've had a slow bleed in the stock market and we've had a flash crash in the cryptocurrency markets, and this may leave you wondering when is it going to end and what else is going to happen. In this video, I'm going to be going over the latest news in the cryptocurrency market. We're going to be analyzing the charts and analyzing the price of Bitcoin to see how low can you go, how low can you go, how low can you go, never do that again. And we're going to discuss, could this current crash of 50% that happened in the cryptocurrency market, could this be coming for the stock market? Okay, let's get into it. Okay everyone, looky here. More bad news and more doom and gloom coming from China. They're not only targeting banks and institutions for accepting crypto as payments, they're now targeting miners and exchanges. And so when this was announced this morning, this led to a flash crash again, and Bitcoin fell all the way down to $33,000. So we are looking like we're getting more bullish trends in the Bitcoin market, and it looks like there could be more falls coming. But let's have a look at this article. So Bitcoin whipsawed into the weekend after a fresh warning from Chinese officials over cracking down on cryptocurrencies. The largest digital currency fell as much as 10% in late Friday trading, as to as low as 33,500 before rebounding to 38,000. The coin almost hit 30,000. I think it did on some exchanges, went down to 29,000 early in the week after ending May 14th at 49,000. And so people, I don't know about you, but this just seems so suspicious. Day after day after day, we're just getting more and more bad news about Bitcoin and about cryptocurrencies, just as the Federal Reserve announced it will be launching its Federal Reserve digital currency, its FedCoin digital dollar, CBDC, whatever you want to call it. They'll be discussing about this in the summer with the public. They bashed it. They said, look, it's not a meaning of exchange. It's too expensive to transact. It's too slow. And look how much it dropped, everyone. It's not a store of value. Bitcoin's dead, they say. So to me, that just seems like too much of a coincidence. This is definitely a coordinated attack, but that doesn't mean we're not going to enter into a bear market. So the latest blow came when Chinese State Council reiterated its call to curtail Bitcoin mining and trading. The crypto market was already rattled early in the week by forced selling and possible US tax consequences. So of course you've probably already heard of this. The US Treasury calls for stricter cryptocurrency compliance with IRS and says they pose a risk to tax evasion. People, there's just a huge grab for taxes right now. This current administration, they're increasing capital gains tax, they're increasing real estate tax, corporate tax, personal income tax. Why are they increasing all these taxes when they can just print money out of nowhere? And they create huge inflation, and that's really a hidden tax because the cost of everything goes up, and then they get more revenue from tax, and then they go and spend it on all these schemes and stuff, and they say, don't worry, it's not going to cause inflation, or we're not going to have to tax you more. Well, look what's happening now. We're getting inflation and we're getting higher taxes. And people, this is something huge, and this is something you have to look out for that will confirm 100% that we're in a bear market, is if Bitcoin falls below its 200-day moving average, which is about $31,000. It did earlier this week, but then it rebounded straight back. And listen to this. In the meantime, volatility in Bitcoin is likely to stay elevated. The sell of Friday once again pushed Bitcoin below its average price over the past 200 days, which to some chartists and technical analysis suggests it could trend lower still to around $30,000, where it found support early in the week. And that's what I was saying in my previous videos about Bitcoin. A couple of days ago, I was saying, look, if it breaks 40K, it's probably going to 30K, and it did. And then I made a video again saying, look, I don't think the sell-off is over. And then we did get another dump to 33,000 when it was around 40,000. And people, what you need to know when you look at history of Bitcoin and the previous cycle is, if you look here in 2018, when it hit a peak of around December 16th, you know, it dropped, and then look, it had a big rebound here, and then again a rebound, and it just kind of bounced down. So these are what are called dead cat bounces and bull traps. This is kind of like what happened after the big crash. It went back up to 40K and 42K, and people saying, yeah, the bull run's still going. But this could just be a trap, and this could be the whales trying to squeeze every last dollar out of you where it hits these levels, and then the retailers jump back in when it hits around 40k, 42k, then they dump, then they pump it again, retailers buy back in again, then they dump, and the cycle continues until it reaches the bottom. And people have been telling me, look, this is normal for crypto. These big crashes are normal. And yes, it is normal to have corrections of say 30, 40, maybe 45%. But Bitcoin falling from 64,000 to 30,000, that's over a 50% decline. And that's never happened in a bull market, and then the bull market continue in recent bull markets. It happened in 2013, but Bitcoin was a lot smaller then. So as we can see in this chart, the corrections are mostly in the high 30s, not over 50%. And if we look at this chart here, the market cap hit around 2.5 trillion on the 12th of May, and then $1.1 trillion was wiped out by the 19th of May. 1.1 trillion gone in 1 week. Do you think that's retail investors selling? No, these are the insiders, the hedge funds that are selling, the big institutions. They always sell first, and then the retail investors always get caught holding the bag at the last minute. And we're probably going to see some more bounces, but again, those are traps just to squeeze out that extra dollar from you. So everyone, what I'm looking for is, I'm looking for it to hit 30k again, and if it breaks through 30k, it could fall all the way down to $25,000 to $20,000. And remember, in the last bear market, Bitcoin fell around 80%. So that means Bitcoin falling 80% from 64,000, it could fall all the way down to $13,000 or $15,000 very easily in this bear market. So you're not going to be able to time the bottom perfectly. So a range I'm looking in to start accumulating in the bear market, if it does come, is anywhere between $20,000 and $15,000. So probably what you're asking yourself is, will this crash in the cryptocurrency markets leak into the stock market? Because markets are starting to become more and more correlated. The monetary system is becoming more and more connected with all these derivatives. And when something plunges in one market, it can affect other markets. So first things first, what you have to understand, what caused this huge crash was $8 billion in liquidations that dropped Bitcoin so quick when we saw that 30% decline in 1 day. So in order for us to have a flash crash like that in the stock market, we'd need to see if there's leverage in the stock market. And if these leverage positions, if this margin gets liquidated in the stock market, like what happened in March when we saw 7 to 13% declines in the stock market in 1 day, because all these people getting margin calls, if that happens in the stock market, we could see a flash crash just like what's happening in crypto now. But how much debt is in the stock market? Well, $8 billion in liquidations, that's nothing. In the S&P 500, there's $820 billion in margin debt. That is an all-time high. And I've showed you this chart before, but I just need to drill it into your head to show the liquidations that cause the crash in the cryptocurrency market. If we see a steep decline in the stock market, or say for example, these institutions that are manipulating the cryptocurrency market, if they look at the S&P right now and see how much margin debt there is, they could dump in the stock market to try to liquidate people in the stock market as well, and then come in, they'll short it and then buy up the dip. And something that I don't see many people talking about in the cryptocurrency market, all they really talk about is tokenomics. They just really talk about what's going on in the Bitcoin world. They don't really, in general, some of them do, but many of them, they don't really look at what's happening in the economy overall or in the financial system overall. They don't normally talk about, interest rates or what the Fed's doing or what's happening in macroeconomics. But what led up to the huge crazy bull run was all the stimulus checks in the US. There was so much stimulus, there was so much creation of the M1 and M2 money supply, money printer was going burr, and so this was good for Bitcoin, and also the dollar was going down. And obviously this was good for stocks as well. But there are now calls around the world, not just in the US, for quantitative tightening. The central banks around the world are starting to get called out, and people are starting to say they overreacted to the pandemic and printed too much money. So if we have a quantitative tightening and a reduction in the balance sheet, and I've all showed you that chart of the Federal Reserve, every time their balance sheet goes down, stocks tend to go down as well. That means the dollar will increase, and if the Federal Reserve has to lift interest rates to battle inflation, that'll also lift the dollar. And also when interest rates rise, stocks fall, commodities fall, and if the dollar gets really strong, even precious metals will fall as well. And again, if we look here, how overvalued the stock market is right now, and it's so funny, When you go to the S&P 500 and you look at the dot-com bubble, everyone goes, oh, it's so obvious a bubble. It was so obvious. And same thing with 2007. Oh, so obvious it's a bubble. Well, people, all the metrics, all the indicators like the S&P 500, PE ratio, that's a price to earnings, is now just where it is 2000. But people aren't saying it's a bubble now. Why isn't it? It was so obvious in 2000. Why isn't it obvious now? Same thing with the S&P 500 dividend yield. It is now below the 10-year US Treasury. It is down 1.39%. Again, the only time it was lower was in the dot-com bubble. And that was so obvious a bubble. So again, why isn't this obvious we're in a bubble? And the Warren Buffett indicator. The stock market is 223% of GDP, which according to the Buffett indicator is strongly overvalued. And if we look at the gold chart here, we can see gold has been rallying over the past couple of months. From March, hit a low of around 1700. Now it's back up to 1880, nearly 1900. So what are the hedge funds and institutions seeing? Are we seeing a rotation out of Bitcoin back into hard precious metals? I think this is definitely happening, and I think it could continue if we see more regulation, when we see more bad press about Bitcoin. We could see more Bitcoin or more institutions putting their money from Bitcoin into gold. And even it says here, big institutional investors are dumping Bitcoin and going back into gold, according to Morgan. Because what you have to understand is there's a big, huge push for a green renewable energy agenda. And whether you agree with it or not, all these institutions, it's very political, and there's a lot of politics in these institutions. So if all of a sudden they get a bad rep for having Bitcoin on their balance sheet and promoting coal, well then they're going to get peer pressured to sell their Bitcoin and go into something that's more renewable energy friendly. So everyone, what I think is, I think this Bitcoin sell-off isn't done just yet. I think we could retest $30,000, and if we break that, we could fall all the way down to $25,000 or $20,000, and that would 100% confirm we are entering into a bear market for Bitcoin. That doesn't mean it's dead, and this will mean it will be a good time to accumulate when there's blood on the streets and when so much fear and when everyone's forgotten about it. That's when you want to buy. You don't want to buy when it's all-time highs at $60,000. And what I do think is going to be happening, and what I do think is going to be coming, is the Federal Reserve will have to taper its balance sheet, will have to lift interest rates, and I think the sell-off in cryptocurrency could be coming to the stock market. Now, obviously it won't be as quick, it won't be as severe, but we could enter into a slow bleed over the next 6 to 12 months in the S&P 500 and in the Nasdaq. So everyone, what do you think about this? Let me know down below. Now, for all my loyal viewers and subscribers still watching, you're awesome. If you haven't already, please tap that like and subscribe button. I'll keep you updated on the latest happening in the stock market, the cryptocurrency markets, and global finance news. If you're bored, I'll put up some of my other videos here. I'll see you there.